So I want to share a story with you because this story actually comes up more often than people actually realize. I actually worked with a client who actually did what everyone told her to do. She registered to get an LLC. She was trying to do things the right way. But this is what happened, right? All of the money still went into her personal checking account. Every dollar that she earned, every dollar that she spent came in and out of her personal checking account because she didn't have an EIN yet. She didn't open a business bank account yet. She didn't know how to separate things. So she just kept doing it the way she knew how. And during that year, she personally spent $50,000 of her own money to build out a physical location, a place where her clients could come in and get their lashes and eyebrows tinted. She paid for the construction. She paid for the fixtures, the furniture, the supplies, things that made that space usable for her clients. And the entire time that she thought, this probably doesn't count. This is just money I had to spend. I used my personal account, so I guess I can't write this stuff off. By the end of the year, she had earned about $84,000. But when she came to me, she was overwhelmed because she made $84,000, but she had done spent basically her savings to build the place up. Because in her mind, she had made $84,000, and that's what she thought she was going to be taxed on. What she didn't realize is that she didn't just earn money that year. She invested in her business. She paid for inventory. She paid for the build out. She paid for advertising. She paid for phone service. She paid for content, and she paid for the tech tools to actually create the content. She paid for professional marketers. She paid for photographers. She did all of these things that were a part of making her business operational. But because everything came from her personal account, she assumed that none of that actually mattered because the business didn't technically pay for it. And that assumption is why most people lose money. So we had to slow things down and actually explain this to her. I actually walked her through what she spent, not just what felt like it was official, but what was ordinary and necessary for her business to actually function. And one by one, she started realizing, wait, this actually supported my business. This wasn't just random spending. This is how I serviced clients and generated my income. The issue was never that she did something wrong. The issue was that no one explained how running a business actually works, how deductions actually work, and that an LLC by itself doesn't create clarity. A name on paper doesn't create protection. Systems do. Once we addressed the EIN issue, once we separated her accounts, and once we created clean tracking and we started building her business credit, everything became easier to understand and easier to defend. And the relief that she felt wasn't about, oh my gosh, I'm saving money. It was about finally understanding that she hadn't wasted a year. She hadn't messed up, and that she just didn't have the structure to see the full picture. So I'm sharing this because I know that there is someone listening and is thinking, I use my personal account. The money that came out of my personal account, it don't matter. It does not count. I thought I messed this up. And I'm here to tell you, you didn't. You just need clarity and you need structure. And that's fixable. If you want help understanding what expenses actually count and how to clean this up properly and how to actually move forward without guessing, schedule a tax strategy session with me. Because building a business shouldn't come with confusion, and doing your best shouldn't cost you more than it has to. So comment tax strategy session and I'll send you the link to schedule.